now coming into picture, giving out the license, saying that now you can start a company called as account aggregation company, wherein you will work as a aggregator between customer and the bank. Customer, all he needs to do is go to your site, upload his basic banking documents, and then he gets a unique ID. This ID can be used for any account verification for the customer when he applies for a loan. So this is one segment that is coming up now. In the last 12 to 24 months, it has been started coming up. This is one area where a lot of things are going to happen in the next 3 to 4 years, and we can see that how the lending part is gonna grow. All these years we were savings. India has been always been a saving based economy. With the millennials coming in and a lot of people in the younger age being part of the population, now the lending has been getting into the front end, where savings becomes a back burner kind of a thing. People now getting into the lending side, which is what I was trying to say previously, saying buy now and pay later. So these are some of the basic products which are now in the market and people are trying to use it. I would recommend you guys to come use these facilities, use these products to see how the experience is all around these products. Based on this, maybe when you are trying to get into the entrepreneurship, you are trying to get into this fintech segment, based on your pain points, you can come out with a different product and launch something differently in the market. That's all from my side. Thank you once again. If you guys have any doubt, you can ask any question you want.
So we are having the question answer session at the end of all the 5 sessions, sir.
Sure. Thank you.
Okay. Thank you so much, sir, for your valuable input. So can we go with session 4?
Yeah, please go ahead.
Yes, okay, sir. For the 4th session, we have our expert speaker, Mr. Ganesh Mohan, sir. He's personally connected with RLIMS. He's a proud alumni and he was also a university gold medalist. He's experienced in digital payments, transaction process, and information technology industry. He's expertise in processing debit or credit card management. Earlier, he was in the position like business analyst, business development manager. Currently, he's the director client services, Visa International Mumbai. We welcome you, sir. Today, he's with us to share information on the topic payment ecosystem. Over to you, sir.
Thanks, Ramya. Well, let me try to present my screen. Just give me a second. I'm audible, right?
Yes, sir. Yes, sir. You're audible.
Yeah, my screen is visible.
Yes, sir. It is visible.
Okay. So good afternoon to all. Good afternoon to all the students who has joined this forum today. Glad I had this opportunity to interact with you on this occasion. I really appreciate RLIMS team for the initiative on the web-based symposium, and which is a new normal now. Also wish to thank my professors and principal and directors in RLIMS who has given me this opportunity for the great occasion. Back to home is now true now. I am back in RLIMS as a guest speaker, but this is my home previously, so I love this way to do it. And without further delay, let us deep dive into the presentation. I believe everyone in the forum has been using and doing an online purchase or purchases in a supermarket or cash withdrawal with a small white plastic or a plastic which is there in your package or via a card number, 16-digit number which used for the transaction, right? Anytime you wondered how the system works, what happens behind the scenes is the whole payment ecosystem we are talking about. So let's get started how the ecosystem looks like. The whole ecosystem, payment ecosystem, when you talk about, is basically starts with the people who wants to buy things from the others. So as a customer, I need to purchase something from a merchant. Then it is the payment ecosystem assets. The key people who is participating in the payment ecosystem, as you see in the whole diagram, the people who wants to buy, the customer. In our terms, in the Visa technologies or network terms, we call them as a cardholder. People who wants to sell products or services is called the merchant. And the ecosystem also has certain people like networks, Visa, Master, Diners, Rupee or NPCI we call in India, and many people are behind the scenes, which it's network. Then you have a banker who banks with the merchant. When you have a banker who has a relationship with the customer or a cardholder. Then also you have certain technology partners we call in our terms, which is the merchant processors and cardholder processors. Basically, what happens? A customer goes into a merchant's location or goes into a website of a merchant. He swipes a card or keys in a 16-digit card number. The transaction goes to his processor or a technology partner who analyze every Visa, Master, whoever it is. And we analyze the information, whether it's everything is proper, various artificial intelligence goes, automated process goes, and all those information, risk management and efforts, we identify who the banker, cardholder bankers are to the bankers. And the banker will analyze the cardholder current status, card status, risk mitigations, and he says, yeah, everything is fine. Now you can give the goods and services, and passes back the whole economy which we are talking about. So that's the whole payment ecosystem, and this many people are there in the industry who work behind the scenes. When we talk about issuer processor and acquire processors and the bankers, networks, everywhere the fintechs are there today. Everywhere the boom in the economy or boom in the payment ecosystem happens because of this key technical or tech fintech players who are there in the industry. So let's just deep dive into some of the payment ecosystem journey as is. It took centuries to evolve, and the digital payments took decades to evolve. And the leap we have today is going on every minute, and everything changes in any moment in the country or in the world. So the whole journey started with a barter system, as you know. There was an exchange of goods or services. Like I give a fish, I get a wheat, and I give a cattle, I get some coins and stuff. That's the whole barter system all about. Then come the precious metals. It started in China and in Middle East, where people started giving and precious metal like gold or silver and stuff, so that they can exchange goods they want. Then introduced coins and currencies. And history says it's around 500 BC when the modern coins and currencies came into picture. But in India, it's around 180 BC. We had King Ashoka, who has already started the coins circulations and currencies and circulations. Then came the checks in 17th century, where you go to a bank, put your checks, clear it off, get the withdrawal, and stuff will happen on the way. Then came the cards in 1950s. Kadirvel has spoken about the cards, how it came in. Let me deep dive on some of the information on the cards as well, how it evolved, which is an interesting fact as is. And then now whatever we have is the digital payments. So how the card came into effect in 1950s? Kadirvel has even mentioned that the card came into picture as a diners. But when we backtrace it, somewhere in 1928, the first card has come into picture, which is called the Chaja plate, which is like a dog plate or dog tags. People used to have imprinted their name, address, and other details will be given to the merchant, and merchant handles that. So this will not be with the cardholder; it will be with the other than the merchant. Whenever I go purchase something, the merchant takes the charger card and he will swipe it in the machine and stores in the ledger in the paper imprint, saying that this is the purchase done and reconcile later point of time. It was being used for a while, and 1934, air travel card was introduced, which we call today buy now pay later, was introduced that point of time itself, where you buy something, the airline travel card, they will get the information and post it to the card holder, and they will pay it later. The card holder pay it later. In 1950s, the first card, what we know today, the merchant, which is not closed loop, it was an open loop card. It had a little bit disadvantage because the adoption rate was not so successful. In 1958, Access Bank of America has taken an initiative to give a Bank America, which is which was popular because it was an open loop and it was given to multiple merchant acceptance point. And this Bank America card was converted into Visa, as we know, in 1976. In 1969, Citibank and other financial institutions in America wanted to have a competition to Bank America card. So that was later become a MasterCard, which we almost know today. So this is the evolution of the card. The first card, which came in 1950s. The card is not what you do to embossed card, which has a bulge environment in it. You go merchant, he has a type machine, which is seen in the diagram, which I have will be there. They will imprint it and take that ledger and they will circulate to the other party. And in 1960s, it became a swipe technology where you have a max stripe, which is when you look into the backside of the card, a black color stripe is there. That has magnetic information which can be read by a magnetic reader. That was introduced in 1960s. In 1990s, to have a better security, chip and pin was introduced, where you dip it, there will be a small chip in the card, which will be read, and the information will be carried for the transaction. In 2000s, we had a contactless technology. And at present, we have the smart technology. You carry a phone, you tap, and you need not even have the point of sale machine. The tab mobile itself can be used as a point of sale machine. That's the evolution we are talking about. So let go into a payment ecosystem and fintech innovations, how it was there. We have some various pays in the industry, like Google Pays, which revolutionized the payment cards or card industry as such. I have only listed a few here because there are many innovations in the whole globe, which we need more time to talk. So I have listed only few. In the industry, Apple Pay was, and it was a huge hit in the US economy because people need not carry a card as an additional information. So they can carry their phone and go on wherever the NFC machines or their acceptance machines are there. They can go tap there and get it being used because Apple Pay has significant issue of market capturing because Apple Pay was deal in US country, other part of the world. Later, it was taken as Samsung. There was somebody called Lupe was introduced. Lupe was actually a company, a fintech introduced. Sorry. Hello.
Sorry, sir.
It's a monologue. I just wanted to double check. Lupe was a company which a tech company which introduced a simple device. You can insert this device into any phone, and this phone can a payment device as such, and the other party need not upgrade them to NFC or this I have a traditional old which is just max stripe, but Lupe can use Stripe application as a as reading your tap and pay cards like Apple Pay does. This was a very successful and 2015 Samsung has acquired Lupe and they introduced this Lupe their devices. Then onwards, huge hit across the globe because Android and Samsung was known face other than Apple in other part of the world. So now in the higher variants of Samsung, you can provision your card, any number of card, and you can take that phone and you can tap it. Even if the card reader, which is there at the merchant, is not enabled for near field communication or NFC communication. That's a huge hit. That's innovation. That's kind of innovation which we need to think about it. And the next one is the blockchain. We all know the cryptocurrency was a huge hit, and everyone knows about the cryptocurrency. And it also changed the world as such on the payment industry because nobody wants to do digital, and they started doing the transaction. But is the blockchain just used for cryptocurrency? No, which can nobody much on it. Even though there is a application, there are papers, but still, this is the huge industry to look in, like smart contract, tracking, regulation, using the documentations and stuff, which I believe it is underutilized or underlooked. It has to be looked into. India, you have many usage in the country. Then chatbots, you may be seen, it's like a WhatsApp window which you have in many retailers or merchant acquirers website. You go there in chatbots and financial institution assess. You go there, you type in some information, there will be another who responds to that GSS. But the artificial came in, chatbot more intuitive, and they are enough to respond all your queries. They connected to your artificial intelligence engines. So can have any personal assistance. Like I can get a loan, I can get a assistance on my payments, I can get a assistance on what is happening everywhere. So that's a chatbot which revolutionized the people not going into traditional old locations and doing financial assistance, and they sit at their home and complete their process. The next is voice authentication or authorization, which is not much used in India, but across the globe it is being used and popularly. I can call Alexa or I can call Google, and I can purchase pizza. I can purchase my goods. I can book my tickets. I can go for a night ride, and anything can be done with a voice authentication or authorization. Due to some regulatory requirements and stuff, it is still unlaunched in the country, but it is nice stuff to go because today the voice-based speakers is everywhere in the home and it can be used. Other stuff is IoT, Internet of Things, and AI-powered machines. So this is so useful. Convert anything, we call it as any token payment module. For example, a car. Let's take a car going vacation and stuff. What if the car is disabled? What if on a way want to know where is the next petrol pump, or I just want to fuel my engines? The car artificial or it will nearest petrol pump. It will allow you there, and you need not step out of the car. Once the petrol has been pumped in, it automatically pays on the bill. Same way, I go on a car, I order for a pizza in the car itself, and it's automatically paid. When I go to the certain location, I can pick up the pizza and I go home. Which is so useful in the current situation, right? You need not interact much with the people. It's all enabled automatically. It's not. It's like not a sci-fi environment we are talking about or movie we are talking about. It's there. Realistic has introduced it. AI is operating on this right now, and many companies has come up on that. The next step is the push payments, which is today UPI. It's a push payment services where you push money to others. It started with this person to person transfer, or a cardholder to cardholder transfer. But today the usage has become more significant, and the market like India has become an example of this push payments across the globe. Okay. With this, I will go for the next step, fintech. The word which I mostly love when I read is good leader build product, great leader build culture. So the product, whatever built, is of no use. It will either fade away in a certain point of time. But when you create a culture that people will not change the process they are using today. So the UPI become culture in the country. Nobody wants to leave it, and they want to continue as it is there in the country, right? So that's how you create a product which can be used by everyone in the country. So how is the fintech is being used or it is getting evolved? Is today we have support funds. If you have proper supports of funds, talents, and technology, that fuels the fintech innovations today. And do we have it? Yes, we do have it. Funds, yeah, it is. There are more venture capitalists across the globe. Even the companies like networks like Visa, or Master, who fund a big. We have a significant talent pool in the country and across the globe. And India is known for its talents and technology. Yes, it is growing. Like when you talk about the internet, mobile banking, or mobile segments, or transportation stuff, everything has been fueling this innovation today. What is being neglected previously is being used it today for solving the problem. We never thought somebody like who doesn't own any car like Ola, Uber, who has a major car rentals across the globe. They don't even hold a car previously. So now today they have a cars as well, but that's how the people are. Amazon, we started with no store, but they sold products. So everything is neglected previously, were never thought of a case, but today it was a big hit. And big events, which has always fueled the fintechs. For example, internet revolution, mobile revolutions, and the pandemic right today, COVID, has also fueled the big innovations in the country across the globe as well. The cross-border transactions, which was not being thought even in our country. It's always it's a closed loop transactions. Like even the push payment is always being considered as a P2P transaction within the country. Whereas there is a huge opportunity cross-border. Like if I work for an international company, I need the payments or I need to be paid for my work. It happens via a wire transfer today, or you should have a banker at the different country, and they will be fuel or they will be depositing money as your payroll over there. Whereas there are certain process where you can push what I work for, I can they can push money to my local account and I can use it across. All right. And when you travel, assess travel is not there much here now, but when you travel, the cross-border transaction is a huge. The cross currency has been a huge. There are huge revenues which made by the banks and other players in the country for the cross-border transactions. Whereas the thin line between the different currencies is being diminished slowly, and now there will be in future, like when it comes as a cryptocurrency and currencies equivalent to that, you will not have any bifurcation between currencies going forward. Banking as a service, it is being utilized, and even today I have been I read an article in the paper. It says RBI is looking for corporates to bankers as well, which will have a huge change in the industry as such. So let's see and watch and see how it goes. And B2B payments, which is also not much used today. It has to be used, and fintech has been into this B2B payments system. And not to mention, we have biometrics, we have many other new technology which has been fueling the whole fintech world. So let me go to the next one. What is the trend changing market landscape in the payments? So this is some article I read, and which was published. There is funding of $60 billion which has gone in fintech in the last 2 years. Almost 50 unicorn fintechs has been emerged across the globe. I'm not talking about the whole globe. $60 billion has been invested as such. It is being boomed, or it has been largely invested now during this COVID period, because this is the time people want their technology and reaching the people across the globe, so that everything becomes more advantageous for them when the market turns up, right? So there is a high opportunity in the fintech, where if you are trying to be an entrepreneur or working as a fintech or in the payment industry, there is a huge investment which has come in. And consumer and business are going into digital today. Everyone happens to have a mobile and do a mobile banking and do a push payments, and things are so easy today. And cloud-based computing, open banking, APS has fueled the market to a great extent today. The other one for a fintech to coming into a trend is unbundling and bundling of financial services. I have put up Google Pay here, and you can take a Paytm as well as an example, where the traditional old bankers will have the savings, pushing money from one bank to another bank and stuff. And these guys like Google Pay or Paytm started as a normal P2P transaction. I push funds from my wallet or my purse in my mobile to another person who is nearby. They unbundled all the services. And they gave only first service as giving one service which is majorly hit, and they made the cardholders or the customers to use the services again and again and used to it, and they don't want to leave it. Post that, they started introducing other services to them. Yeah, they have introduced, for example, they have introduced the loans, they have introduced purchases, they have introduced savings, they have introduced investments like golds. Everything has come into the same Google Pay or a Paytm. So now they started bundling each services into a simple, so they are replacing the traditional bankers, and they are becoming a neobank or a fintech who give all services. So the difference between the normal fintech neobanks to the traditional bank is now getting merged. So one day the financial fintechs or neobanks become a banker themselves rather than having a old traditional bankers. And there is a huge opportunity which a fintech is eyeing is in commercial payment, which is not being used today. For example, I purchase tons of raw materials for my industry. I do payments via wire transfers, or I do a check, or I do other services where this is not being used as a traditional payment methodologies. So there is a huge opportunity for fintechs to use the payment industry or a payment ecosystem in this, rather than using the checks and wire transfers. And they are merging every services. The fintechs have started merging each and every services into a single service, or multiple recommends into a single service, so it can be used as a single solution by anyone and everyone. For example, to my office, when I do and go for an office meeting previously, or do any expenses on behalf of office, I use my card, which is given by my corporate. It's called as corporate card, where it is tied to my corporate account and it will be tied to my company assets. So when I do a transaction, these expenses are given as a papers, and I will get a receipt. I need to have another company which is aggregator of all this billings. I will upload into that system, and my banker will give some information to this company, and they merge it, and they provide that, yeah, my accounts are tallied and my office expenses are okay. Then it's slowly made into mobile devices. So I need not need not wait for uploading, scanning the paper separately, upload into the system. I rather open my app, I scan the papers or expenses sheet, and I upload it in the system. And slowly they converted in a different mode. They integrated with each and every merchant which most of our offices use. Like, for example, a Trident Hotel, right? They integrate with them. So when I do an expenses, the bills are automatically generated. They push the bills to the third party fintech, and they integrate with the other systems, and they look into the bills and see if it is proper as per my category. If it is okay, they close the expenses there itself. I need not even intervene in anything on it. So this is how things are moving in the fintech landscape. So this is all my presentation, and I believe I made justice to my presentation. So I will wait for your questions, and any information you can look into my LinkedIn profile, and you can chat with me later point of time as well. Thanks for your wonderful time.
Thank you so much, sir, for sharing your valuable input with us. So finally, we are at the end of the technical session. The last session we have our guest speaker, Mr. Prasad Mohan, sir. Can we start it, sir?
Hello, am I audible?
Yes, sir. Yes, sir.
Yeah, okay.
Prasad Mohan sir is a passionate towards technical analysis and risk management. He earned his MBA degree from Tyagaraja School of Management. He has completed a diploma in international banking and finance. He was a university gold medalist and NSE certified market professional. Currently, he's the manager Forex Karur Vysya Bank, Mumbai. We welcome you, sir. Today, he's with us to share information on the topic Fintech risk mitigation and management.
Thank you, Soumya. And can I have my presentation, please?
Yes, sir. Vikram. Sir, is it visible?
No, not yet. Not yet.
Sir, it is visible for me, sir. What about you?
Yeah, okay, I'll just proceed. I have my presentation even on my laptop. And I would like to thank RLIMS and Dr. Subba for giving me this opportunity. And I would like to start my presentation. And before I start, I would like to add a few points to what the earlier speaker said. Like they were telling like fintech is like a whole new category, but traditional banking is also not far behind. If you see in today's scenario, traditional bankers have started offering all products online, even loans such as retail loans and even gold loans are being offered online, where you can deposit a pre-set amount of gold with the bank, and whenever you want, you can avail the loans online. And even account opening, insurance aggregation, everything is being done by traditional banks also. So fintech is like becoming more and more a partnership with the traditional banking instead of being standalone entity, which earlier it was. Now I'd say it is like almost merging into the traditional banking and enabling traditional banking also to give these new services as quickly as possible. So if you see the first slide, the definition of fintech, and it is just wherever services which were previously inaccessible, using technology, we are rolling out to the consumers. So in that case, if you see can you go to the second slide? I'm not able to see the slides, but I'll go to the second slide. You can see this insurance aggregator, InsurTech. For example, if you take the case of InsurTech, what they basically do is they try and fix your premium by getting personal data from you. For example, if you're going to get a health insurance policy, and if you have these apps which will determine how much physical activity you're doing, by sharing those data, you get a discount on your premium. So such sharing of sensitive personal data, which can be used in any way, the onus lies as of now on these fintech providers. But whenever this kind of data becomes like they can use your data for any purpose, which is not very regulated as of now. But in all these cases, almost all these cases, consumers are sharing their sensitive personal data. And if we move on to the regulators who are regulating the present financial institutions, you basically have the RBI for banks, SEBI for the markets, IRDA for insurance, PFRDA for pension. And though technically NPCA and the IT Act is not a regulator, some of the policies are being framed by them. And according to Section 43 of the IT Act, you have the SPDA rules, which is nothing but the sensitive personal data or information rules. These fintechs have to adhere to these rules so that the consumer's data is not misused. And moreover, even if these fintechs are getting credit lines from traditional banks. So, for example, MoneyTap gets its line of credit from Ratnakar Bank, and MoneyTap has a proprietary algorithm based on which it gets data from consumers to give loans. So, if basically the loan is being given by RBI, a traditional bank only, even though the consumer is facing only MoneyTap website or an app, the loan is being finally decided at RBI end only. So whenever we are substituting a physical regulated entry, substituting a physical regulated entity like bank with this front end fintech, but the risk which are previously absorbed by the bank still remains the same. So this is where these regulators come into play.
Prasad, you tell them when you want to move the slide. Keep on telling
sure.
them.
Yeah, sure. Can you now go to the fifth slide, advantage over traditional FIs? So one advantage with these fintechs over traditional banks is they have no legacy issues. Means they are not bundled with old data, old software, old paperwork, etc. So they are starting new, so they have the advantage, like they have the latest software, paperless things, video KYC, biometric authentication. All these things are there with the fintechs. So in this case, they can easily comply with any new rules because they are not bundled with old migratory issues and other things. So let's move on to the sixth slide. It's nothing but risk management. And risk is nothing but an unforeseen event which has a probability of bringing both positive and negative outcome. So in essence, it could be risk management nothing but to reduce the volatility of any outcome so that the financial institution is not going bankrupt as a worst case. There are two main strategies of risk management, which is nothing but risk avoidance and risk mitigation. Risk avoidance is by removing the entire scenario, like wherever there are pain points, you just outsource it to another agency so that the liability becomes theirs, or you use a new technology to entirely avoid the issue. Like if you fully automate KYC using video KYC and biometric authentication, including Aadhaar, everything, you are just avoiding the risk which was earlier there. And risk mitigation is where in certain areas you cannot avoid the risk. By lending, you still have the credit risk which cannot be avoided, but you can take steps to mitigate the risk by giving credit only to those who meet your criteria, like those who have that higher CIBIL scores or credit scores, and those who are having a stable income. You are mitigating your credit risk. And let's move on to the next slide. And some of the major risks faced by fintechs or any traditional banks is credit risk. Whenever lending is coming into the picture, even in P2P lending, you have the credit risk. This alternate lending and modeling, they all are having credit risk. Credit risk is the risk where you don't get your principal back because of non-repayment issues. And the second major risk is the operational risk. It includes any kind of risk, even includes IT disruption, regulator risk, data compromise, fraud, etc. And can you move to the next slide, please? And under operational risk, cyber risk is something which is very major, and top fintech companies agree that cyber risk is one of the biggest threats they face to their business model. And it comes under both the purview of the risk management department as well as the technology department, like the chief technology officer or the CISO. It comes under the purview of both of them. So what our regulators are done is they have conducted studies without stifling the growth. They are trying to regulate the growth of fintechs. Can we move to the next slide? Am I audible? Hello?
Yes, Prasad, you're audible, Prasad.
Yeah, thanks. So regulation can be a simple disclosure by the companies to full-fledged supervision. And two major things done by RBI is bringing out regulatory sandbox and innovation hub. I'll just move on to the next slide. This innovation hub is where technical supervision and explanation of regulatory rules are being done by experts to these evolving fintechs so that they can grow faster and they can avoid the risk. And this is called innovation hub. This is promoting interaction between major players and bridging this relationship between traditional banking and fintech services. So this is one of the steps taken by RBI. Can we move on to the next slide? And regulatory sandbox. This is where, like, before moving untested products, our regulators have several regulators across the world are following this model called sandbox, in which customers are targeted. Like the fintech is supposed to give you the list: who is my targeted customer, what is my product, and how it's going to be tested, how it's going to be verified that it is risk management practices are in safe, and these things are done before rolling out the product fully to all the customers. So this will prevent major risks from going from this fintech to traditional banking and finally affecting the entire banking space or the finance space. So this is also one of the initiatives by RBI in India. They have a working paper on this. If anybody is interested, they can just go and read that. And next comes the I'm in 12th slide. I'm not able to see the slide. Sorry. This is called RegTech or regulatory tech. The answer for risk management in fintech comes from the fintech industry itself. There is something called regulatory technology or RegTechs. These are companies which focus on reducing risk by ensuring compliance and other operating within the regulatory framework. They help the companies in monitoring, reporting, data protection against and against several threats. These companies provide solution to the existing FIs and the fintech players to protect themselves from any kind of external cyber attacks, as well as in complying with the various regulations. And there are several top companies in RegTech emerging from India itself. I'm on to the 13th slide now. So whenever real-time monitoring and other issues are required, these RegTechs offer solutions which will help existing players to basically reduce their risk, because the volume is massive. If you take UPI, there are billions of transactions occurring. So it is not possible to monitor each and every transaction using manpower. So these are fully automated. It decides based on the spending pattern of the customer. Suppose I'm regularly spending 1,000 rupees, it won't raise any flag. If suppose suddenly I'm using my card to debit for a lakh rupees or 65,000 rupees, it will raise a flag, which will then be monitored by a human employee who will take a call whether he has to confirm with the consumer or he can pass the transaction. So these kind of things are also coming up with the help of AI and big data. Credit card companies are using this on a regular basis. And next slide, please, 14th slide. These are some of the companies, RegTech companies in India. Like this Accura Technologies from Delhi. They are using for e-verifying remote users. They have solutions for e-verification of remote users. And this Pixnix is from Chennai. Similarly, for verifying KYC, segregation of data management, everything, we have several companies coming from the fintech space, but these are specialized risk management. So this will be the end of my presentation. Thank you for giving the opportunity. Hello.
Thank you, Prasad. Over to you, Soumya.
Yes, sir. Thank you so much, sir, for sharing your valuable information with us. So finally, we are at the end of the session. Before winding up, we would like to hear from the participants. I think we have got a clear idea on fintech, but still, if you wish to add some detailings, you can interact with the speakers by raising questions.
I think all the speakers are available now on the call, so you can ask
Yes, sir.
questions.
So we are giving the first opportunity to the participants from other colleges across India. So you can come up with your questions.
May I ask a question?
Yes, please introduce yourself.
I'm Gina Saneek, third year BCom student from Alishad Arts and Science College for Women, Kozhikode, Kerala. So, what shall be the useful safety measures to prevent fraud in digital payment system?
I think this is a general question thrown to everybody. I think one of the panelists can take up this.
Yeah, sure. I think I can shed some light on this.
Please.
There are several guidelines, means several safety measures you can take to protect yourself from these cyber attacks. By first of all, you should not use public domain or internet cafes to do such kind of financial transactions, or use the free Wi-Fi available in hotels or restaurants. You can prevent cyber attacks. And also, you can install a proper antivirus in your system. And thirdly, you can set limits. Nowadays, you can set limits in your cards, in your internet banking. Like you can set a limit for 1,000 rupees. Beyond 1,000 rupees, it won't allow you to do any transaction unless you go and change that. And you can also keep tab on, like you can stop international transactions on your card. And even otherwise, if you're hacked or something, and if you get the message or something, if you immediately inform your bank customer care, they will, your liability will be absorbed. According to RBI, customer will not have any liability if he informs the bank within 7 days, if I'm right.
Thank you, Prasad. Kadir, Ganesh, do you have any views on it?
I think Prasad has explained it well, sir. I think Ganesh, if you have, you can add it up.
Yeah. So definitely I will add on that. So apart from the normal consumer changes or consumer behavior to be changed, there are other measures being taken across when we saw the payment ecosystem or other parties as well. Like right, networks have introduced artificial intelligence, will scan on each and every transactions and getting monitored across the globe. So it's made sure that the transaction is not fraudulent, and there are scores which is attached to the transaction and sent to your bankers. If you are an issuer, your cardholder banker will be getting this information and they can filter it out. Apart from that, there are many other tools which bankers use to mitigate the frauds. They have the self-grown tools, and they have very many tools in the markets. So that's how the risk is mitigated as on today. But it is an evolving process, because whenever there is some fix comes in, or when mitigation comes in, the fraudster becomes more intelligent than that. And it's an evolving process which will evolve across the globe.
So thank you. Soumya, if there are any questions in chat box also, that read that also, right? Over to you, Soumya.
Yes, sir, we have a question from Vishal Asrani. He's asking that, do you think fintech can be used as a mode of building social change?
Yeah, sir, I think I would answer that question. Hi, Vishal. So, are you asking whether fintech as an ecosystem will come to a day-to-day ecosystem? The answer is yes. I'm sure you are today using Google Pay or Amazon Pay, some kind of payment you will be doing it. Yeah, it's a social thing, and you'll be continue to do it. And this industry will continue to evolve, and you guys will come, make it more frequent to use. I think I answered your question.
Thank you, sir. Any other students?
Sir, may I? Hello? Hello, sir, may I?
Please,
Yes,
Shanmugh.
introduce yourself.
Yes, yes. Sir, I need to ask some questions to Mr.
First, please,
Srinivasan, sir.
yeah,
May I,
first,
sir?
please, yourself.
For myself, Shanmunathan, first MBA from Oral IM, sir. And my question is, now we are in era of 3.5 in fintech. You told that fintech evolution has started from 1932 till present. From this, which is the hardest challenge fintech ever faced during revolution, sir?
I think Kadir, the question to you, Kadir.
Yeah, I got it. Hi, Shanmugam. So I will simply
Hi,
answer
sir.
your question. Anytime a transformation comes, adoption is a challenge. Adoption at any point of time, it is always a challenge. When I say adoption is, I'll give you a small example. 10 years before, if someone has asked you to share your mobile number to do a, there was a privacy issue. So adoption is a challenge at any point of time. With respect to fintech, any industry, anything you bring new, so adoption comes. So I'll give an example how fintech handle adoption also. I am not a fan of this cashback model. I think majority of the people in the industry are not a fan of cashback model, but adoption was accelerated due to cashback model also. That is the reality. I think the government prevent you to give cashbacks, especially Google Pay. Apart from Tamil Nadu, anywhere in the India you interact through Google Pay, you get a 1 or 2 rupees credit in a 10 to 15 transaction. Challenge, I would say, irrespective of the era. Even today, the adoption rate, when we say the scope is there, because we need more people to adopt the environment. So I think Shanmugam, you got this for it.
Yes, sir. Yes, sir. Thank you. Sir, another one question. When you talk about the penetration between mobile versus bank, is less in India when it compared to other countries. Why, sir? What is the reason, sir?
Come
Hello,
again?
sir.
Are you saying the penetration?
Sir,
So
in
I got it,
India,
Shanmugam. So,
the okay, sir.
it's about the penetration. Okay, if we go back to the slide, so the penetration, China is there number one. I think towards number two. If most of the fintech evolution, it is. I don't think we are lagging behind. And just for information, our UPI, which is evolved in India, it has been taken as a case study by Fed Reserve, which is like a RBI in United States. RTGS and NEFT transaction from them, their ideology. But now we are in a mature stage where our models are being examined there. So our adoption rate higher side only, Shanmugam. We are not that much delayed, but we, as I said, our adoption rate is higher on the urban towns. We want to increase the penetration in the, say for example, Madurai, you will have penetration. Let's take Madatur, Paur Chatram, somewhere Tirunelveli belt tire through where the technology has not reached customers. So there are n number of opportunity. Okay.
Okay, sir. Thank you, sir. Thanks for your information, sir.
Sir, we have one question in the comment box from Shivaranjini. She's asking that which specific sectors do you think have greatest material influence with the existing fintech firms?
Hi, Dr. Shivaranjani. I think the question is from you. I think it is over to anyone in the panel who can answer it.
Shivaranjani, can you explain your question? When you say, I'm not able to understand it really.
Shivaranjani, can you open up the mic and speak to the experts?
Talking about business drivers, the business, I believe that is what you're trying to say, right? What makes you to make this sector to the question? Basically, I'm not understanding what is this greatest.
Shivaranjani, can you open the mic and talk to the expert? That will be ideal.
Sir, I think she has some connectivity issue. Probably back to
Okay,
her.
go to the next question, Sonia. Let her come back. We'll answer her question.
Okay, sir. Few more questions.
Sir, may I?
Yes, Vijay. Yes, go ahead.
Sir, I'm. Sir, sir, I have one. I am Vijay. I'm from All IMS first MBA, sir. I have one question. Why younger generations is having trust on fintech more than the elder one? Please, what is the reason, sir? Sir, am I audible?
Yeah, you are very much audible. I think Subhaya or
Okay.
Ganesh, you guys want to answer it?
I think it is Subhaya's turn. Subhaya can answer this.
Yes. Could you come to the question again?
Sir, I repeat the question, sir. Younger generations is having more trust on fintechs, except the elders, sir. Why? What is the reason? Why younger persons are more attracted towards fintechs and elders or not?
Okay. See, the basic tendency, the how you are wired. Basically, the simple thing is today my parents, for my parents, uh, do not like any online banking facility. It took me around 7 years for me to convince them to get into the bank, to the ATM card or the debit card itself. Basically, because they have the feeling that it is always a physical touch that is required. Face-to-face interaction, that is the
Okay,
most
sir.
important part of the banking thing. They have believed that if you only go to a branch, to the account, cashier or the branch manager, only then uh, it is the correct way of banking or doing the transaction. Whereas this
Okay.
generation millennials don't expect basic necessity. They feel that they want anything everything to be in the fingertips fast.
Okay, sir.
Today, I don't see people try to go to a bank to do any kind of transaction. You that I want to do it online. I'm okay with digitally.
Oh, okay.
I am moving to digitalism. Today, WhatsApp is being used for payment also.
Yes,
So
sir.
very
Yes.
recently, WhatsApp started. So when I was part of NPCI, I was working on the WhatsApp project. So we know how much of a change that is going to bring about. So today,
Okay.
I think you will prefer to do any transaction on WhatsApp than on by going to the branch.
By going to the
It is
bank.
simple,
Okay.
simple, basic wiring. Yes, bank or branch, anything you want to go about. It is a basic wiring that humans have today. Parents,
Okay.
our parents, our elders, they always had the physical touch. They wanted to interact and do things, which we don't
Yes,
like
sir.
these days.
Yes.
Even though four friends come together, sit together in a chai shop or a tea shop, you still have a mobile in between us to talk. It is not the
Yes,
face-to-face
sir.
interaction. So
Yes,
this is
that's
one
the
of the
fact, sir.
reasons why today's youngsters have more interaction to more what do you call it as more attraction to the
More
fintech side,
attraction towards fintech, sir.
digital side of the banking and products. True. The
Okay.
elders don't have it. This is the
Okay, sir.
basic thing that is how we have been wired. That's
Sir,
I think I would
another
have
question.
answered this.
Okay, sir. Okay. Thank you, sir. Sir, another
Vijay,
question,
Vijay,
sir.
Vijay, ask specifically to which person you are asking question if possible.
Yes, sir. Okay, sir. Okay, okay. I will ask. Sir, Mari Rajan, sir, I want to ask you, sir, another question.
Okay, please go ahead.
Sir, wait a minute. There are new technologies and development are discovered day by day, sir. In that, what is your opinion about the safety of the consumers in fintech, sir? Fintech technologies.
To simply put it, there is always a challenge.
Okay, sir.
The reason is as the technology evolves, I shared in one of the slide, right? Security seems to be very hot topic nowadays.
Yes, sir. Yes.
As we come out with more and more advanced solutions and more criminals are finding a way to breach all that.
Okay, sir.
Therefore, it is always a challenge to maintain both the things together.
Okay. Sir,
I hope I answered
yes,
your
sir.
question.
Yes, sir. It's right, sir. Thank you. And I have another final question, sir, to you. Sir, many entrepreneurs are there. Some may succeed and some may fail. So, what is your advice to the budding entrepreneurs, sir?
Okay. Entrepreneurship is it's like walking on a slippery slope.
Okay.
Okay.
Yes, sir. Yes.
Some in less than 6 months time or 1 year time you will see success. Some even after 3-4 years there is nothing. If you
Okay.
take
Yes,
Google,
sir.
they took tens of years to come out with something best.
Yes,
Till
sir.
then nobody recognized them. Whereas Apple, in a different angle, they were reaching the customers very fast and making money.
Yes, sir. Exactly.
Right? Uber, when they came, it was completely new idea, new thought. But the copycats, when they come in, it is pretty fast. They add few more plugins than the copycats.
Oh.
So there is
So
no
this.
what is called right or wrong in this. All right.
Okay.
So need
Sir.
not have to lose hope.
Okay, sir. Is
Constantly
the,
you have to try it without.
even though there is risks, we have to do it confidently. Is it, sir?
Yes. The passion is more important than anything else.
Okay, sir.
I shared you right. We
Yes,
don't
sir.
want to copy other people how they make the products and all.
Mm.
Our solution need to be distinct.
Yes, sir.
That is where we show them that 4096-bit dynamic encryption. Nobody can offer.
Yes, yes,
So
sir.
something very unique solution only we wanted to do. We don't want to cut anybody else's business.
Yes, sir.
All right. So if it is unique, you will definitely find a opportunity to sell the product.
Okay, sir. Confident is very must for an
Yes.
entrepreneur, I
You
think.
should
Yes.
not lose hope.
Okay, sir. Okay, sir. Thank you. Thanks for
Appreciate it.
the
All right.
thanks for the answers, sir. Thank you.
Most welcome.
Thank you. Over to Soumya. Soumya, yourself, Soumya.
Yeah, can I, sir?
Yeah, please, Mohana, go ahead. If you say specifically to whom the question, it will be happy.
So I have need from Mr. Subaya Olimuthu, sir.
I think it is over to
Sir, am I
Subaya.
audible? Sir, am I audible?
You are audible, Mohana. Subaya, sir, are you available?
I think he has some network issue. I think he should join.
No issues. Yeah, Kadir will answer the question. You carry on.
Okay, sir. Hello, sir. I'm Mohana Priya, first MBA from Oral IMS. Can I ask some question kindly with your request? Can I ask, sir?
Yeah, Mona, please go ahead. Yeah.
Okay. How can I introduce to my Fintech products to bank?
Okay. So, so basically, if you come up with a solution, how you want to pitch it? That's your question, right?
Yes,
So
sir.
you should always build a prototype. You can build an idea first, okay, and you can seek feedback from a couple of people around. Then you can reach a VC investors. If they are interested, then or you can also do you can go to IDRBT website if you are more specifically into fintech. Every year I think do some innovation events. You can get registered there and you can put your prototype there. Doing it is another way of doing it is you can build with your own fund. You can approach a VC. Yeah.
Okay,
Anything
sir. I
brilliant.
have another question.
Yeah, Mona.
What are the risks associated with the products? What are the risks, sir?
You're asking about a risk.
Yes, sir.
So any product with some proper assessment of risk, but still there are ways to make it. I think risk. Karur Vaisya, I think there was a speaker from the risk angle. I think he would be better to answer it rather than I am answering it.
Prasad is there. Prasad, can you come in, Prasad?
Yeah.
Okay, sir. So next one, Next, I got another question, sir. Can I ask?
Hold. Mohana, please hold. Please
Okay,
wait.
sir.
Please
Okay,
wait.
sir.
Prasad, are you available, Prasad?
Fine. Okay, I will take this question. In absence of him, data piracy is always an issue. Whenever we enroll a product, okay, the consumer is trusting us. So the data which you are collecting of the consumer, that should be stored properly. Be going to the misuse of data. Like say for example, Mohana creates an app, and you when people are coming to your app, they right, you don't want to sell their information. So that is
Yes,
an
sir.
element of trust.
Yes,
Not
sir.
more a risk
Now I am
expert, but this is a primary risk.
okay, sir. Okay, sir. Sir, next question I have which fintech products are more demand in India? Which products?
India is always a credit economy, credit hungry economy. So lending product is always a hot cake because we are a very hungry economy. And moving forward, I feel savings and wealth management will be more, and robo advisory business to the future. But at the current trend, payments and lending is a hot cake. Going forward, you will have more into investment. So I will give you a small example. When investment comes in fintech, a college guy or a rural guy will able to buy a SIP. I believe it's SIP, right? Standard investment SIP, SIP, systematic investment plan, or a equity. Wealth management can be reached to the nook and corner of the country also through fintech. That might be the future in
Okay,
India.
sir. Okay, sir. Now I am clear, sir. Thank you for.
Thanks, Mohana.
Hello.
Yes, Prasad.
Sorry, I was not able to connect in time. That there was a connectivity issue. There is also a risk, as Kadir sir said, the main risk is due to data protection, which is a concern for many. From institution point of view, there are KYC risk, and there also there's a black box. This proprietary algorithm is shared with traditional banks, so that how the lending happens is not fully transparent to the traditional banks. That is also because ultimately, when borrower to repay, it is going to hit traditional banks who have extended line of credit, and there is also the risk of theft and identity impersonation. Like because all these things are done digitally, there is always a possibility of misusing someone else's identity to get this done. It will also be a major risk. As entire financial space is run on trust, these things can hurt a growing fintech if the proper steps are not taken.
Thank you, Prasad. Thank you. Back to Soumya. Soumya.
Sir, we have one question in the comment box from Chinnamuthu. He's asking that what is your thoughts on fintech and bank collaboration?
I think this question has to be answered by Ganesh. Ganesh, your views, please.
Yeah, I'm here. So fintechs and banks, as I was mentioning, the thin line between the banks, traditional banks and fintechs has been merging today. So previously, we used to think fintechs as a competition to the bank, and bank thinks fintechs as a competition. But today, they collaborate each other. Yes, without the collaboration, nothing will happen. Today, you use a card in a Paytm, you fuel your Paytm wallet, and you use it for other purpose. Bank is also getting benefited because their money is getting floated out, and Paytm is also getting benefited because the transaction is being done. It's today competition is going away and collaboration coming in. For example, if you talk about even us and the networks, thinking about the Paytms of the world or other players as a competitor, that we collaborate with each other. So the collaboration has gone to a greater extent, and tomorrow the banks will become a back-end user, may become a back-end users, and the fintechs may drive in the front end. for any and everything if open banking comes into picture and businesses banking as services into coming into the picture. I hope I answered the question. In case, let me know.
Sir, may I?
Please go ahead, Jaya.
I am Jayadashni from Oral IMS, first to MBA. I have a question to Prasad Mohan sir. Sir, may I?
Yeah,
Prasad?
sure. Yeah, that.
Sir, what are the... Sir, may I audible?
Yeah, you are audible.
What are the interesting fintech startups, sir?
Means I'm not very versed with fintech, but some of the I heard about Money Tap, Lazy Pay, and even this Paytm, GPay, even Walmart. As far as I know, these are some of the things which are widely used by Indians.
Okay, sir.
I'm sure someone else can answer this question better than me.
Yeah, Jaya, if you want to explore some interesting fintech, I would recommend you can go to a Policy Bazaar or a Paisa Bazaar, or if you have an Android phone, you can try to download any of the neobanks. Neobanks are brand new to the country, like Finin. You can try Google neobanks.
Okay, sir.
Quite 3 to 4 neobanks. That is something you can try, and I'm sure you will be using Google Pay and all those stuff, right?
Yes.
If not, you start using it. So that to check it. But I would recommend, we are more a credit hungry economy, and it's not only I am coming from a lending perspective. There are many things needs to be done in a lending. We have all the personal lending, but corporate lending or an SME lending much worked upon, which needs to be worked upon in this country.
Okay, sir. Thank you.
Yeah. Thanks.
Yeah.
So one question in the chat box from Dr. Sharif Hussain. He's asking that what is the income for a payment app provider even as they are giving scratch cards and coupons to anyone?
Okay, let me answer this. See, it's just, can you guys hear me?
Yes,
sir.
Okay. Okay. See, basically, the scratch card or the spin a wheel, any kind of a voucher you get from any of the even banking or non-banking partners like Paytm, Google Pay, everything, it is purely an allied services which they give it. The major benefit is the transaction which you do. So between today, if you are using say Google Pay, right now there is no transaction income for Google Pay, but then they are getting a huge amount of data that is getting generated out of it. What kind of payment you're doing, how you are doing. So to get this data, they're trying to give this vouchers and all those things. In case you take it as a bank, today a lot of banks say that if you spend 5,000 rupees or 10,000 rupees in a month, we will give you 500 rupees voucher, 1,000 rupees voucher. What happens is in that case, when a customer, you, me, or anybody goes and uses the card for say 10,000 for 10,000 rupees in a month, they will get income out of this, which is equal to say 100 rupees for every 10,000 rupees. Approximately, I'm saying is 100 rupees. That is the income they generate. In this income, what they generate, they give you 100 rupees as a cashback. So if 300 rupees is the income, 100 rupees is the cashback, they give it to you. So they still make 200 rupees out of this. Plus, they also get where the customer is spending. So they can give offers according to it. They can ask customer to spend according to it. If a customer today is spending 1,000 rupees monthly on grocery purchase, you go to supermarket or department store to purchase, based on your spending pattern for last 3-4 months, they will tell, okay, next time when you go and purchase something on JioMart or say Flipkart or Amazon, spend for 2,000 rupees, we'll give you 200 rupees voucher. By this way, they are making you to spend more, which in turn gives them additional income for them by way of fees which get generated as part of the transaction. I hope I answered your question.
Thank you.
Sir.
Thank you, Subhash.
So may I?
Please go ahead.
Good afternoon to everyone. I am B. Priyadarshini, first year MBA in RLIMS. I want to ask a question to the guest speaker, Mr. Ganesh Mohan, sir.
Ganesh, the
Sir,
question to
am I
you.
audible?
Yeah, you are audible. Yep.
Yes, sir. During payment transaction, what are the difficulties faced by the merchant and by the consumer, sir?
Okay. So to be honest enough, the most payment or pain point which we face or from the industry we know is the networks and the droppage and the internet. And there are various pain points there, right? When I swipe a card, it goes, everything has to complete in 5 seconds, 5 to 10 seconds only. So there is a backbone which is internet, which is being used in the country or any other network which is being used, which is the most major problem as is. If it is not going properly, yeah, everything drops off and the cardholder will have an impact and the merchant will have an impact and cash becomes an alternative. And the whole industry is trying to replace cash now. So that's the main pain point which I can think about.
Thank you, sir. And my next question is, what do you think, which countries are more adoption in fintech services, sir?
I believe if it is for me, then there is no specific country we can name about because fintech has been everywhere. The adoption rate, India and China is most, and you see Korea, and if you look into countries like Japan, the adoption rate of fintechs and the technology has been high as is. Even in the country like US, the adoption rate is low when compared to the growing economy because the necessity is mother of invention if you talk about, right? So that's where the population, the necessity of fintech in the countries are more, and the revenue is also more in the country. The number of transactions in the country is more. That's where it is more. If it is more populated country, the fintech is more. That's my opinion.
Thank you, sir. Thank you for your answer.
Yes, Soumya, is there any other question or shall we close it?
Yes, sir. We'll have one last question and then we'll conclude, sir. Anyone?
Any other question left over? Good questions left over in the chat box?
Yeah, sir, I saw one question. Does AI is used in trading? Yeah,
Yes.
Gautam, it is used in. I would recommend you to download Zerodha app. So I'm not endorsing app just for idea. You can just use that app. Yeah, AI is used in every field today. Artificial intelligence is used. Systems are trained across any industry.
Thank you, Kadir.
Yes,
Any other?
and dear participants, the feedback form link has been shared in the chat box. Please kindly fill it up. The students, those who are filling up the registration, feedback form will only receive the e-certificate. Please make sure you are filling up the feedback form that has been shared in the chat box of the Google Meet. Sir, can we bring the question and answer session to a close, sir? Or can we bring it to a close?
We'll bring it to a close. On my personal note, I thank all the speakers because when I spoke to all of them a couple of weeks back, they all instantly agreed for it. So I thank Mr. Marirajan. Mr. Marirajan is the connect from Professor Shekhar. At this point of Shekhar, thank you, Mr. Marirajan. And I thank Kadir, Subbayya, Ganesh, and Prasad. Though there is a formal vote of thanks, I thought to thank from my personal note. Thank you. Over to you, Soumya.
Yes, we'll conclude our session with a formal vote of thanks. Now I welcome Yuvashri from RLIMS to propose the vote of thanks.
On behalf of RLIMS, good afternoon to one and all gathered here. Honorable President R. Lakshmipati Sir, respectable Management Executive Mr. Ramkumar Sir, beloved Principal Dr. Sujata Ma'am, our most valued invited guests, professors, students, and friends, it's my privilege to have been asked to propose a vote of thanks on this grand occasion. A big gratitude to Mr. Marirajan sir for his efforts towards technological aspects of fintech, environment, and entrepreneurship. Thank you, sir. I must mention our deep sense of appreciation for Mr. Kadirvel Srinivasan sir for his explanation on fintech evolution. Thank you, sir. Further, we are grateful to Mr. Subaya Olimuthu sir for demonstrating in fintech environment, product and services. Thank you, sir. I may like to express our sincere thanks to Mr. Ganesh Mohan sir. I'm glad to say that he is our alumni for giving his excellent coverage in payment ecosystem. Thank you, sir. I also wish to express my gratitude to Mr. Prasad Mohan sir for providing encouragement at fintech risk mitigation and management. Finally, I would like to take this opportunity to place and record our hearty thanks to our professors for the perfect logistics support and their guidance. And I also thanks to all the participants who joined and participated throughout the International Virtual Symposium on Fintech. Be thankful for who you have, and you will end up having more. With this quote, I would like to thank everyone. Thank you.
Yes, as a token of patriotism, brought to a close.
तव शुभ नामे जागे, तव शुभ आशीष मांगे, गाहे तव जय गाथा। जय गण मंगल गायक जय हे भारत भाग्य विधाता। जय हे जय हे जय हे जय 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 जय।
Thank you, Jay.